What's going on, everybody? This is Dan French with the French Workbench podcast, and I have a great guest today. We're going to talk a lot about the economy and what's going on with mortgage rates. This guy has a wealth of knowledge, and I've been really with this guy for quite a few years. He's taught me a lot of things, and I'm going to bring him in. His name is Patrick Hennessy, and wanted to come over here. So, Patrick.
Hey, how's it going, Dan?
How you doing, buddy?
Very good, very good.
Wanted to reach out to you, man. I wanted to see what was going on. Let me take a look here. So I just wanted to follow up with you and see, how things are going and how you're doing, and wanted to see if how things have been going over in you're in Jersey, right?
Yes.
Okay. And so what I wanted to talk to you about was, we always have a conversation about just the wealth and knowledge that you have as far as the market, as far as interest rates, as far as what's going on in the economy. So first off, let's introduce yourself and kind of give me an idea about what your thoughts are. You've been in this talking about the economy for quite a bit, as far as you represent a company. You were with the company of, I think it was Mortgage Market Guide. So you've had a lot of history and you follow the market pretty extensively, right?
Yes, I'm with the Mortgage Market Guide right now, and we follow the markets every day. This week was kind of a tumultuous week. We had rates spike up, stocks were lower.
Yeah. What is the real reason why everybody's thinking that this, the economy is starting to come back, and you look at the stock market, and the stock market is starting to come back a lot, as far as you have the stock market is really doing very well. Let's just put it that way. And so what is contributing to this? Why is everything starting to come back? Is it because of the vaccine? Like, what are you seeing?
Well, yeah, we have a bunch of things that are happening right now. We have the, stimulus package that's going to be coming out. We had a previous one at the end of December. Stocks like the stimulus package because it spurs on some, consumer spending.
Right.
COVID's loosening its grip a little bit. We have vaccinations that are ramping up. We have positive earnings that have come out over the last, for the quarter. And then let's face it, housing market remains strong. It's like a beacon of light for the U.S. economy.
So we're talking here with Patrick Hennessy. He's with, I think it's Tallabassett. What is your company name?
I represent the Mortgage Market Guide, which is, one of our components.
Okay, so that was recently. You guys recently changed your name because it was Mortgage Market Guide, but now is it changed to,
One of our products in Tabrasa is the company name.
I got you. Okay, so I think what everybody wants to know is where is mortgage rates headed? They seem like they're going up. We have a lot of data that shows that rates have been streaming up over the last few weeks, especially. I wouldn't say because Biden got into office, but it could be because, I don't know, maybe the economy's doing well. Maybe you start to see that people are starting to gain more consumer confidence out there. So what is your thoughts on this? Why is rates going up, and where do you see the housing market heading here shortly?
In an improving economy, we're going to have rates that are going to be moving higher just because of the fact that we have more consumer spending. Inflation may be coming up, in the near future. Inflation is a big part of it because when inflation, rears its head, bond prices seem to fall down, to move lower, and then we have rates that are moving up. And like I said, we have an improving economy. The stimulus packages are another thing because to pay for those stimulus packages, what the Treasury has to sell added securities. Mm-hmm. So once they have to sell all those added securities, that hits the market. It's just inflationary, and when the added supply drives down prices and pushes rates higher.
I think a lot of people too, they don't understand, like, well, did they, are rates going to continue to go higher? Are they going to be hitting, 4%? Is this thing going to stop? I was reading something, Patrick, about the economy starting to recover, and it really won't recover fully until the third quarter of this year. This is what I was reading. And also they said that, everybody's worried that rates are going to continue to go up, but I also saw that maybe rates are going to stay relatively the same. They may go up a little bit, but stay the same maybe this year and heading into next year. Is that what you're seeing as well?
I mean, let's face it, rates are still low. I mean, back on January 7th of this year, Freddie Mac had the rate pegged at 2.65% which was the all-time low from when they started keeping records in 71. So I mean, right now at 3%, we're still good. We could move up a little bit, but even if we went to 3 1/8 or 3 1/4, maybe 3 3/8, that's still historically low.
So it's a good time to buy. I mean, so you look at the housing market. The housing market is still going up. I think everybody thinks it's you got to buy right now because the houses are going to keep going up with price, and then rates are low. And if the rates go up, we always know that when rates go up, Patrick, we always have a hiccup, or there's a process where buyers start to retract. And I think that's what's happening right now is in some cases they're retracting because 6 out of the last 8 weeks we've saw increases in rates. I don't know if that's accurate from what you've been seeing, but I see that some people are like, hey, I'm going to get into the housing market now because, I feel that the rates are going to go up and I'm going to miss my opportunity. Others are saying, you know what? Rates going up 1/8 of a point. You have a lot of consumers out there that are very smart and they're shopping rates all the time. So now they're maybe retracting and coming off the market. So the question is, if rates keep going up, what do you think is going to happen with the housing market?
Well, I mean, as far as housing right now, we have a couple of different caveats in the housing market. First of all, we have lumber prices that are skyrocketing. They
Yeah.
went from $240 last April to almost $1,000 just recently. So that's putting the price of, for a newly single family home, plus 24,000 onto the price. And we're seeing a lot of demand coming from urban apartment dwellers into suburban homes for more space. So we have demand rising. We do have low rates, but we also have low inventories. So that's going to keep pushing prices up, and it could become unaffordable, for your first-time home buyer and maybe many other buyers. But like I said, I don't think the rates are going to skyrocket. We're going to have, I think the Fed is going to keep rates, relatively low.
So they figured this out then, right? I mean, they have a way of manipulating the markets. If something in one sector is not doing well, we have a lot of stuff that comes out. You got the core it's a core CPE, consumer price is at the consumer price index. Also the our expenditure, I think, is what it is, and that's the inflation gauge, right? That the Fed looks at. You also have other things that they look at: employment, they look at geopolitical news, things like that. So with where things are at, and how people are starting to, it seems like they're pulling their money with the investors. And we're talking about big investors pulling their money out of the stock market. out of the bond market, putting it into the stock market. And they're starting to reinvest their money and put it in different places. Is this going to be a continued trend, or are we going to have something that's going to come into the market where either the Fed is going to continue to purchase these bonds and it's going to push things or suppress rates? Or is this going to be something where it's a short-term live where these rates continue to go up for the few months, I guess is the question.
Well, yeah, rates may drift a little higher here in the upcoming months, just because of other things that we outlined, stimulus, added supply, some inflation pressures, an improving economy. So I'd have to say rates may inch higher here in the near future, but the Fed is buying mortgage-backed securities on $1 billion worth of mortgage bonds every single day. And if things get out of hand, like this past week, rates did move up a little bit. If they continued to do that, I would say the Fed would step in and, try to put a lid on them.
If you look at where everybody always asks me, is now the right time to buy a home? That's the question I get every single, pretty much every week. I mean, it's, is the housing market going to stop? Is now a good time to buy? Everybody thinks that this market is going to somewhat, regress, or it's going to collapse, or something's going to happen where we go the other direction. Now, there was a contributing factor. I think, when you look at 2006-07, there was bad mortgage loans being written. Now, when you look at today's market, it's a little bit different animal, but there's no data that shows that we're going to have that market. Yet there's a lot of people out there that think we have a housing market that's way overinflated. They think a lot of these markets are overinflated. Do you think that this is going to have where we have somewhat of a regression, or if rates go up even a little bit more, is the housing market going to start to go into a correction?
Well, we don't see a correction right now just because the demand is there right now. There's so much demand coming from the urban people, and we don't see a correction in the near future. But because of the demand is there, but right now we're not seeing it right now.
Right now. So what are your thoughts? Like, you have a lot of people out there that look at the market, the stock market, and I don't know if you look into Bitcoin. There's other avenues to invest your money, but let's talk about the stock market. Is the stock market going to regress at some point? We've hit some record highs, and it's kind of funny because you think that when you go through a process, or you go through something like a pandemic, and you go through a lot of uncertainty, people are laid off. It still seems that there's a lot of people still investing in the stock market, especially recently. So what's driving that? Is that just consumer confidence?
Well, I mean, right now, as far as stocks go, because we have an improving economy and, people are getting out of the bond markets, stocks are, kind of favorable right now. We have like a 2.6%, yield on the S&P 500 companies. But even in an improving economy, stocks right now are at frothy levels. We're at, basically at all-time highs. In an improving economy, we still need to see corrections going forward. We could even see a 5% correction in stocks, in the near future, just because of the fact that, they're at all-time highs. But I think in the long run here, over the next 6 months, stocks are a good bet, because right now, we're looking at GDP. Now, GDP for the first quarter of 2021 is expected at like 9%. That's the Atlanta Fed model. Now, if we can get California and New York to fully reopen, in the near future, that's 25% of GDP. And right now they're, unopened. So if those two economies open, we can be looking better down the road. But as I said, stocks don't go straight up or straight down. There's going to be corrections along the way.
So I think that it's a lot of good information, Patrick. I really appreciate you coming on today. And you got a wealth of knowledge. Like I said, you've been doing this a long time. I remember getting into this business, and I think you were in the business. I think I spoke to you probably 10 years ago about this, a lot of this information. So I lean on Patrick for a lot of this data. And one of the things I want to say is, I want to talk about where people get confused about short-term bond versus long-term bond. And we talk about, when the Fed comes out and they say, we're going to raise rates, and this is going to help the economy, or, just try to stimulate the economy. This is totally different than mortgage rates. So can you really just decipher between what short-term bonds are and long-term bonds, and how a consumer out there should, take notice when they have the Fed come out and say this type, they say they're going to lower rates? Is that really helping the average consumer and mortgage rates?
Well, the Fed really only can control short-term rates through the Fed funds rate. Now, the Fed funds rate is the overnight rate at which banks lend each other their deposits or extra reserves held at the Federal Reserve. So they control short-term rates such as your car loans, your student loans, your credit card loans. So they can control the short-term rates. As far as the longer-term rates, like your mortgages and whatnot, they're controlled by market forces. What the economy is doing, what inflation is doing, what kind of earnings we have, what's the stock market doing.
Right.
So long-term rates are determined really by what the market's doing, but the short-term, the Fed can control.
Do you have I have a question too on this last thing I want to say. So if somebody's looking at what contributes to worsening rates and better rates. So if you're somebody out there as a consumer, mortgage lenders have different adjustments. They have loan level adjustments. They have different margins that they have internally with different investors. But the trend of interest rate, I think, is where people start to look at. And if you look at the trend of mortgage rates, I did a radio show about it, and a lot of people are interested in the trend and how that works. And so what I want to know is, you can kind of go on both sides. What is contributing to good rates, and what is the data or the news you want to look for, and what contributes to maybe, rates worsening? What is that?
Well, I mean, as far as rates up or down, it's really what the economy is doing. In a relatively good economy, like the one we saw maybe, late 2019, we had the 30-year fixed rate. We probably had that near 4%. So in a good economy, you're going to have rates that are a little higher, and in a bad economy, you're going to have lower rates. So bad economic data will push rates a little lower. Good economic data will push rates a little higher, and generally.
So I appreciate you taking time out on your Saturday. I just wanted to give everybody out there just a little bit of information on how and what to go with mortgage rates and how they trend. Also, one other thing I want to say here is, what about the economy? I'm going to let this go here in a second. We're going to probably end the show, but I want to talk real quick about the economy. Is the economy going to really recover this year? Is this going to be a next year thing? Is it going to be a very slow process? I don't know if you have any data that shows what trend the economy is going to be at, and also the housing market, because obviously I'm in financing. I do lending. I'm a mortgage lender with a guarantee rate. And I think a lot of people want to know, is now a good time to buy? Should I wait? I got a phone call yesterday about, well, I want to buy in California, but I don't know if I want to, buy this as a primary and then move if it keeps going up and maybe go to Arizona. So I think there's a lot of skepticism. People don't know when to buy. They don't know if now is a good time to buy. They don't know about the economy. What do you think about what's going on with the economy and really what's going on with the housing market? Is it going to continue this direction?
Well, right now, as far as rates go, I feel that rates are still very good, to purchase right now. And this may be the good time to do that if you're thinking about purchasing, just because, the rates are around 3%. I don't think you're going to go back down to fairy tale land of, 2.65%. That's kind of rough. That's kind of tough to get back down there again. But looking forward, we still feel that housing is going to be pretty strong. People still have to buy houses, to live in. Like I said, we have that demand from the urban shift over, because more people are working at home. And let's face it, companies are looking at that right now and saying, hey, this is going to help us too, because we don't have to pay as much for office space. But then you get into a different story with commercial real estate, but that's a whole different story.
Gotcha. I gotcha. So are you seeing a big movement where people, and I think we talked about this, where people are now working from home? This could be the new thing where people are, staying at home. They're going to work remotely. There is a vaccine out for this, for COVID and the pandemic we're going through. So I think there's a lot of consumer confidence for people going back to work and people starting to get back to a normal life somewhat. But there's still a lot of people that have moved from, we see a lot of transition from California to Vegas to Arizona to, San Antonio or Texas. A lot of people are coming and moving from New York, and they're moving inward. And what is contributing to this? Do you think that that's going to recover those states where you have a lot of people that are living in those higher, I would say higher property taxes? You got the higher value of homes, places where it's a higher cost of living. Are they going to continue to keep moving inward, or is this going to recover for those states that have seen a lot of people leave because of that reason?
Well, I mean, as far as the recovery, it just takes a while for that recovery to happen, because in a lot of those states, like New York and California, many businesses have, basically closed their doors. So there's no tourist attraction right now in any of those states. It's going to be a while for them to recover. And, with this shift to work from home, you could see just, the demand, continuing, but, not, of course, not at the pace that we saw. It's probably going to dwindle a bit, but I think you're going to still see some demand there.
Yeah. And one of the things you have to look at is when people transition, and, when you see like New York, there's, I've heard stories that New York it's going to be a long time before they come back. I think that, you got to take a look at that, because it may not ever become the same as what it was. I mean, I'm sure it will at some point, but I don't know. Like, I think that it's just different now. It's a different world. And I think that's where we're trying to figure out, is this going to be everybody working from home? People are just really, maybe people only go to New York to vacation, not to live and work, or, you know what I mean? I don't know. What do you think?
Well, I mean, just from what I'm hearing, I have friends that work in Manhattan right now, and they're all working from home, and they don't even know when they're going back. So, I
Yeah.
mean, that's the big if right now. When do people feel safe to go back? When do companies want to bring them back? What's the liability? It's just a big question up in the air right now.
Yeah. Yeah, it is. So I want to say thank you. We'll probably end this call. I just wanted to give people a view and just an insight about what's happening with the market and mortgage rates. One of the final thoughts I want to ask you is, should people be scared of this market? Should they be scared that rates are going to continue to go up? Are you seeing more confidence? Are you seeing more positive than you obviously we did before? And is it going to keep going? Because I think I'm trying to reassure people that, there's a high cost for homes here, especially in Las Vegas. We've seen prices that are, never seen. Well, not never seen, but they're getting up there as far as when we saw the high prices in 2004, 5, 6, and 7. And so, what do people want to? People want to know, like, where is this headed? And I think you don't have a crystal ball. Nobody has a crystal ball. But for as far as the data that you see, are these things going to continue to be same trend, or is it you think there's going to be something down the road that could potentially derail? Prices keep going up. Obviously, we know rates are probably going to stay relatively the same. They're going to be, but the housing prices, do you think the housing prices, are they going to actually come down? Or are they going to start to regress a little bit?
Well, I mean, as far as, rates, with the economy, it's all up to the economy. If the economy continues, to improve as it has been, and if we get back to where we were pre-pandemic levels, like I said, rates at that point were like 3 3/4. I can see them going up that high, but that's not really that bad either when you're considering where they are historically. Now, as far as prices on homes, if the demand keeps going and the inventories remain low, you're going to see prices continue to inch higher. We have to get more inventory. That's the main thing. We need more inventory right now. And like I said, for the new homes, lumber prices are skyrocketing.
Well, would you think that if interest rates would correct this? Meaning, if rates go up, people have a tendency to pull back. So I guess the thing is, would people pull back if they saw rates, and would that contribute to the housing prices start to come down? Meaning, if you know what I mean? Because you see a lot of people now, they're educated, they go online, they're researching. A lot of times it's not the exact information, but I get a lot of people that do research. They do a lot of information. They have a lot of information online. They're doing a lot more homework. So what I've seen in my past is that when rates start to go up, especially when they really shift at a very higher, like at a higher rate where it's half a point, full point, they really start to pull back. Is that going to correct the housing market, you think?
You just read my mind. Basically, if they inch higher slowly, that'd be better for the market. But like I said, since January 7th, we've seen them go from 265 to 3%. That's a pretty steep rise in a short time. And if we do see that, continue, if we see them, maybe go from 3% to 3.25 in the next 2 weeks. So you're talking about, 3/4 of a point in 2 months. That's a big jump. So that could, like you said, maybe put a pause on it for, and maybe, okay, let's see what we're doing here. Let's hold off. Maybe they'll come down a little bit. So that could happen if there's a spike.
Yeah, and I think that's going to be the ultimate deciding factor, because there's no data that shows that the housing market's going to, for at least for here in Las Vegas. I can't tell, I can't say for where you're at, but even in Las Vegas, I can't see that. There's no data proving this. And, we're back to the times where, Patrick, when you go buy a new home, we talked about lumber being up 170%. When you go buy a new home and you look at, there's a lottery now, we do another podcast, and, there's a big line of people waiting to get into a house, and that demand is there. And, we have like 2,200 homes on the market, which is really, really low. I mean, I think a healthy market is upwards anywhere from, and I'm not a realtor, but probably 5,000 to 10,000 on average existing homes. So it's pushing people to go buy a new home, and I don't know until you see something change. I think even with rates though, going up that high, a lot of people are coming from other states that have a lot, they're selling their home. They have a lot of money because they're selling their property, moving here and buying a new home. And people like that, people that are moving from another state to buy a home, and they're going to a lower cost of living, maybe, you know, going from California to Vegas. So I just don't know if, even if the rates are going to maybe push these people back as far as buying a home here, because they're looking at it like, look, the same home I'm buying is 800 to 900,000 here in California or in New York or East Coast, West Coast, or, you know, I can go to somewhere like Vegas or Arizona and buy one for half the cost. So I don't know. I mean, is rates going to really push people out of Las Vegas to buy homes? I don't know. Is that something that you've seen before?
Well, I mean, I guess like you said, you know, pockets of the United States, you're probably going to see, you know, like you said, you have people leaving these, you know, big, huge homes for, you know, big money and getting half the value, not half the value, I mean half the money
Yeah.
for, you know, a nicer home. But yeah, I mean, as far as that goes, you know, we'll continue to see that because a lot of people are just leaving these big states.
Yeah. And they're leaving the States. They're leaving them obviously because there's a lot of stuff going on in these states, but why would you want to pay higher taxes and higher cost of living, especially like we said, if you can work from home? So it's like a perfect storm. Rates are low. You can sell your house. It's a seller's market, no matter really where you're at, in my opinion. I mean, I'm sure there's some states out there that you're not going to make as big a profit, but you know, it's a seller's market. So, you know, when you got lower interest rates, it's a seller's market. You go out and buy a home in another state and you can work from home. Right. And then there's a lot of people that are able to do that. I get a lot of people when they're trying to approve going from a second home or investment home. And what they're doing is they're getting a human resources letter stating they can work in any state. They have the ability to buy this as a primary residence in some cases. So I do think that with all this data that's out there in this perfect storm, I don't know when it's going to stop. I don't see when this is going to stop unless something happens where, you know, unforeseen that we had, just like we did back in, you know, like I talked about when we had the housing market crash. Something has to happen where this is going to change. Is there any, like, if you have a housing market collapse, you have a stock market collapse, or maybe just maybe just a all market crash, if you want to call it that, is there something out there that would make the economy or you know, push the economy or have a housing market crash if all of these markets something in one of these markets started to stumble? What do you see anything like that?
Well, I mean, the only thing that, you know, you can really put your finger on right now is the amount of debt that we're accumulating.
Right.
You know, it's just it's out of control. You know, I don't know how they're going to pay for it, but so that's the one thing that we're looking at, which could be, you know, a detriment to the economy.
Yeah. And what's funny here is that in Vegas, they actually have a billboard out here that says how much debt we have. And so that number just keeps going up. And you know, when you print that much money, I know it's not dollars that we're having, but it's still electronic currency in circulation, correct? And so, and that creates inflation, right?
And you know, I don't know if you guys heard of the person that wrote The Big Short. I forget the gentleman's name. It was about, you know, he was the person that basically called the housing bubble crash. I forget the guy's name, but you know, he came out with a new book just recently. You know, he's talking about, you know, all the money that's being printed, the money that's coming from Congress. It could really lead to some crazy inflation going forward and, you know, drive the value of our money down. But we'll have to see how that plays out. But I forget the person's name, but you know, he wrote The Big Short. He made a ton of money on the housing market crash because he predicted it, and no one listened to him. So if you hear of the guy's name, you can see it. But you know, he's talking about, you know, all the money that's being put out there. It could cause a big crash in the future. But we'll have to see if that happens. You know, that's one person's opinion, of course.
Yeah, it is. And I think it's just because I think a lot of people want to know, you know, what to do with their money, where to, you know, place their money. You know, have a lot of people talk about Bitcoin. I have a lot of people say, you know, should I just put my money in a house? Should I put it in the stock market? Is there any safe haven out there for somebody to invest their money? You're obviously not a financial planner or anything, but just what you've heard or what you've seen, you know?
Well, I mean, for the long run, you know, the stock market, you know, like the S&P 500, for the long term, for long-term investors, is always a good starting point. And of course, yes, housing. We know housing's always been a good starting point for everybody. It's you own a home, it increases in value most of the time. So I say, stock markets. If you're a long-term investor, and housing.
Yeah, and the thing too is, we go back. I mean, when we had that crash, the housing crash, we always say, well, should we invest in that money? Should I put that money into that house? Well, a lot of people that held onto their house, eventually the money came back and the equity came back. So markets always recover, and if you have a house, if you have to be somewhere and you have to, and I had this conversation yesterday, if you got to buy a home because you're renting, I would only rent because I had to, right? And for most people, I think even if you bought a home and let's say they're thinking like, this is an investment, this is what I'm trying to make a profit off this. Yeah, everybody wants to do that, but that doesn't necessarily mean everybody's going to get a ton of equity. But what it does do is it holds a payment where it's fixed. Also, it does have the ability to gain in equity. And I think a lot of people don't know, like, well, should I just stay renting or should I go buy? And we always say this, if you have to pay some type of monthly payment, try to pay yourself forward. We can't say that you're going to get a huge profit off buying a house in this market, but I mean, trends are going up. I don't see how how you couldn't at least break even minimum, right? And so if you have a fixed payment, you don't have to worry about rents going up. I don't know. For me, I think I'm just going to roll the dice and buy a primary residence. If you're looking at an investment property, I don't know, that would have to be in a specific, probably a state or somewhere where it's thriving or you got a bigger return on investment. Places like Vegas and Arizona and California, I don't know if there's really a return right now. So I would probably, reel back a little bit on buying investment properties. But if you're buying a primary residence, I would just, I understand prices are going up, but rates are low. You just talked about it. Yeah, you just talked about it. Rates are so low right now that, even if it went up to 3.5%, Patrick, there was points and times in your life where rates are at like 20%, correct?
Oh God, my parents, they were 18%. When I first bought my house, it was 9%.
Yeah.
So I mean, look, at 3%, the money is so cheap right now.
Yeah. And I don't know. I think people, especially you got a lot of people that are in the newer generation or the younger generation, they don't want to buy a home. Maybe they've never seen the rates being as high as they are.
A lot of these people haven't seen, higher rates. They've only seen low rates.
Yeah.
But these rates, I don't know if they're going to be around forever. But like I said, if we get an economy like we had from late 2019, we could be back up to 3.75, which is still historically low.
Do you think if we hit 5%, if we hit 5%, do you think everybody is just going to pause? I mean, because look, I'm going to tell you, when I got in this business, I was looking at, 9, 10, 11, 12%, and it slowly went down. But I think there's a number. I know when it went to 5% before, man, there was a huge pushback and there was a lot of people. I don't know. I mean, we have rates right now still hovering the low threes and high twos, low threes in some cases, and even to the mid threes. But, I don't know. I mean, if you go to that 4.5%, 5%, it seems like people really start to get a little bit, they just start to get a little cautious. So I'm curious to see. I don't think rates are going to pass 4% this year. And what I've been reading is they're probably not going to pass 4% or really go up that high in the next couple of years. Are you seeing the same thing on that?
Well, I mean, as far as if you ever saw like a 5% mortgage rate, that would have to mean that the economy is doing extremely well.
Yeah.
The job market's doing fantastic. Maybe at that point, maybe people could afford more, because we're in a better economy. Maybe more people back at work. You still have 10 million people out of work right now.
Wow, 10 million, huh? What's the unemployment numbers? Now we always talk about this. The unemployment numbers are not always accurate because it's not everybody that's unemployed. It's just for a period of time that they've been unemployed, and then they just lose sight of those people, right? Is that correct?
We tend to look at the U6 number, which is total unemployed, and that's about 10% right now. And even Fed Chair Powell, he said, I bet you the real unemployment rate now is right around 10%.
Yeah. Well, what I'm going to do is this, Patrick. Are you willing to come on here? You don't have to be on here every week, but you have a lot of knowledge, and I'd like to bring you on here every once in a while, maybe about a half hour or so, just to kind of give the viewers and the people out there that want to know more about the economy. Maybe we can have you on here, every couple weeks or something, or maybe once a month.
I can do that.
Okay. This is Patrick Hennessy. He's a great person to talk to about, he's giving me a lot of knowledge. Patrick, do you have any way do you get people, how do people get a hold of you, or how can people find you, I guess? Is there something that they can do because I know you work for, what is it? How do you say it?
It's Tabrasa.
Tabrasa. And yes. They were mortgage market guide at one point, correct?
Yes. Well, we're still the mortgage market guy, because that's one of our products. So that's basically what I run. We watch the markets, pipeline management.
Yeah.
I also put out content on a daily basis, what the market's doing and whatnot.
Where do they find that, Patrick? Where can they find your information as far as what you're putting out on the markets?
They can just go to mortgagemarketguide.com.
Okay. All right. Well, listen, this is Patrick Hennessy. Really appreciate him coming on. He'll be on again. And like I said, he's a wealth of knowledge. He's a person I lean on for a lot of this information. And, I just want to tell everybody out there, thank you so much for tuning into our podcast. And we'll have more good information just like this about rates, the economy, and really what direction, if you're trying to invest money, that's what we're really trying to help you with. So this is Dan French with the French Workbench podcast, and we'll see you at the next podcast. You guys have a good day.